This is Tesla, and yesterday or the day before, I was going to post on it. I did a video, didn't like it. I've been laying off on the videos a little bit, and so the market was here. So I thought the market would do an ABCD pattern lower, but that's not. These are typical patterns, and you have to decide how you're going to trade it. It gaps like this. It doesn't even close the gap, and then it goes lower. You think there's a lot more downside. So we're just looking at basic range boxes and trading, from box to box, okay? And so this is on Tesla. Now, it's not the best thing, in my opinion, to trade equities at this time. I think these markets are bearish, and the ones that made a correction higher are really failing to close gaps and other things from above. But like this is a failure to close gap. Well, it didn't. It closed this gap, but if you look at the whole thing, the market really is a bearish looking market, and I probably shouldn't put it on this time frame. It's a bearish looking market with lots of gaps that haven't been filled. It's a very bearish market, and it can't even get to the 382. So I'm looking for it to go lower. But the real reason for doing this, it's just a what if, is this. This is what I think of as a Gartly pattern. I'm not really much of a what do you call them? Uh, what do you call those patterns? Oh my gosh. Well, you know what it is. It's I'm blocking it. But those patterns mimic an ABCD pattern, a harmonic patterns, and harmonic patterns something that Larry does. But I draw ABCD patterns a little bit differently. And so then the harmonic patterns, it's a function of how charts work and how you figure out harmonic patterns. And so from my point of view, even though it doesn't fit perfectly, what I see is the market doing this, and getting down to this area. Now my lines aren't on that accurately, and they look terrible on the way that I normally draw ABCD patterns. But from my point of view, because I do believe Gartly is one of those patterns you should consider. Gartly, with or without fib relationships, because people put a lot of fib relationships to these patterns. But when Gartly was looking at this stuff, when Gartly was looking at patterns and writing his book, that was before I was born, and there were just daily charts. They didn't have computers. I bought my first computer when I was 31. So a lot of the technology that people think we've had for zillions and zillions of years, they don't. It hasn't been there that long. So what's happening though, there are patterns that are repeatable, and this is one of the ones that I would look at as a repeatable pattern. An impulse going like that, and then a fairly symmetric, the aesthetics of it look very clean. That's what I would interpret as a Gartly pattern. Now, what I didn't do, this is a 4-hour chart. Let's look at it on an 8-hour chart first. So I like that. Let me see. And then I have to adjust a little bit, but basically, aside from minor adjustments, a market that does, I don't know if you call this a two-legged or a three-legged swing. It does this, it does a correction, and it does that. So is that 2 or 3 legs? I guess we'll call it 3-leg, but I'm not sure. If the market comes to this area, you look, if you were Gartly, at a very strong reversal going higher. And that's what he used to call it the 222 pattern. And they named it, they meaning somebody, named the 222 pattern after Gartly. They put his name to it. And that's what everybody thinks about. So, and to me, that's okay, because I'm not going to draw any more lines, but I see a nice gap higher here. And that doesn't necessarily mean that the market's going to come to that gap or how it's going to trade around the gap, but I still look at them. So my target would be generally in this area. And then I look for buyers. It's a market that gapped higher and tested the gap. That's how I would say it. But what I'm particularly interested in is whether it's a Gartly pattern, because they can be very dramatic patterns. And it's a nice, clean, so far, a nice, clean pattern. And then we would look for buyers. And also, because of the nature of all this, it's not just that I'm looking for the Gartly. It's there's no support here really. It's to me, this market is going to go lower. I think this is a support, but the market's, well, it's not quite there. So you might find some bars. This is where the market gapped higher. So you might put it here under this bar, or you put it here. But there's really not a lot here that's preventing this market, which is here, from going lower. And also, you can do it. It won't. You can do it if you don't want to look at all this stuff. And this is the low, and the market made a new. It didn't make a new high, but traded higher. Then, as the market's going below this low, and it will, the market will give you something. You just do an extension. So what I'm doing today is I started off with the oil, and I tried to organize the oil into a trade. I talked about realistic and unrealistic ways of handling markets that you're not comfortable with. You look for stops that are reasonable. You can't have stops that are ridiculously out of sync with that kind of a market. And now I'm looking at patterns and setting up a market before it gets to that. It doesn't mean that I'll trade to this. Normally, it depends on who you follow, but with people who probably have credibility with the harmonic patterns, they will tell you. And I'll give you an example. A trade would be Sunrise Jack. He's one of the most listened to guys on Tradingview. He would normally tell you, I do believe, that it's not that pattern until all 5 portions of the market have been met. So 1, 2, 3, 4, 5. It's not a Gartly until it gets to the final 5th count. And so you don't trade from the 4th to the 5th saying it's a Gartly. That's not what the guys that I've heard talk describe in these patterns. So you can use it as a reversal pattern if the market gets to it and trade whatever you're however you do that, but you're not trading it as if it has to go to this level. That's not how the good, there are a few of them, the good people that talk about harmonic patterns do it. It isn't a harmonic until it meets the criteria. And a half a pattern like this is not the harmonic. Because if you start trading like this without having a better way of analyzing why the market would go lower, not because of multiple complex swings like this, but you're following price action, that's the way to take the market lower. You might have patterns inside of this, but this is how people catch on. They say it's the greatest, latest thing. There'll be harmonic players, and then what they try to do is trade every swing of a harmonic before it's a harmonic. That's the irrationality, and that's the trouble that people get in if they're not very careful how they interpret the patterns of people who are expert on the patterns that they're trying to work with. So in any case, I just want to do one more thing. I said I would do it. And so that was the low to the high. And I could also use, now it's at it's approaching the 1.272, but I would use an extension. And if that doesn't work, I would go deeper into this by looking at a smaller time frame. And what time frame am I using? 8-hour chart. Well, I do a 4-hour chart and look for a little bit more detail, but there's no trade. The function here is that the market looks like it's going to do an ABCD pattern. It does have a gap here. You want to watch it. This could be a double bottom, and it might find some buyers there. I don't know. But if you can put some of these patterns on ahead of time, it helps orient you and gives you more than just a black box. That's what I talked about the last video. I try to set up markets when a lot of my information is there before I need to make a trade decision, so I can have anticipation with flexibility that if the market gets to that level that I'm looking for, I'm letting the market help me, and I'm setting it up, and I'm generally going to look at it just a couple of markets because it takes a lot of time to trade a market. You're trying to find that target, that reversal area, and you don't do it on very small time frames. You do it based on the patterns that you see on the time frames that are tradable. And an 8-hour chart, a 4-hour chart, maybe a 2-hour chart, a daily chart, even a weekly chart, they all work. But you want to stay away from the small time frames because that doesn't matter to me. I don't need a small time frame here. It's not the only way this could be a trade is if it starts accumulating buyers here. I'm not going to worry about the Gartly thing. And do I find buyers at a double bottom? And that remains to be seen. So that's it on Tesla.